Hi everyone, welcome to Tuesday. And of course, every Tuesday we take a look at the performance of the New Zealand Stock Exchange and just see how it's been performing over the week and see if there's potentially any new opportunities. Remember though, this is for educational purposes only. No way is it intended to be personalised financial advice. If you're looking for that, obviously you do need to go and have a chat to your own financial advisor. Right, let's take a look and see how our main board performed for last week. Right, as you can see here, this very last candle, I've just got my cursor there. The week was down last week, which is not too bad. If you look where the dotted line is, you can see potentially that could be a line of support because we've had 2 weeks in the last 4 where the market has closed at potentially all-time highs, which could be performing your line of resistance. The little caveat I'm going to put here is if I zoom in, if I look at that last candle, look at that big strong wick at the top. That means that the sellers were definitely in control. So the buyers drove the market up to the top of that wick, but the sellers ultimately won, if you like, or the bears, and closed the market below where it even opened for the week. So that is something that we do need to be a little bit cautionary on, because when you start seeing long wicks at the top and the market was down, such as last week, that could potentially mean that we could be in for some downside. Now, I'm not into trying to pick tops and bottoms. This is just how to read candlestick charts, and that's what it's potentially telling us at the moment. Let's jump over and have a look at the 1-year chart, simply because it brings these candles up to daily candles. And look at that. So Monday, Tuesday, Wednesday of last week, we had great positive days. Now, nothing wrong with having a down day. However, on Thursday, this is what we refer to as a bearish engulfing pattern. So what it's done is it's bearish because it's closed lower than where it's opened, and it's actually engulfed, completely covered the candle prior to that. That is something that we do need to keep an eye on, like I just said when we were looking at the weekly chart. Then, of course, Friday, again, we had the buyers trying to drive that market up with that long wick, but the sellers definitely took control and closed us even lower than where we were on Thursday. Like I said, cautionary. The other thing to look at down the bottom here, I have got these bars up, and that's the amount of volume that was traded on our stock exchange for each day last week. I've also got a 13-day moving average running through that. And if you look at that very last bar on Friday, you can see that it popped above that 13-day moving average. Now, that too is a little bit of a negative sign, simply because we want to see strong green candles appearing above our moving average, and any sell-off we want to be quite minimal. So we've got a few things there, 3 in fact, that we need to keep an eye on. We've got that bearish engulfing pattern, we've got that large wick on that last candle with no tail, and we've got the sell-off above our daily moving average. Let's go and put our moving averages on the chart and just see what they're actually telling us. Look, like normal, we'll put the 30 exponential, and we will also put the 15 period moving exponential on. Because I'm looking at this on a daily chart, it means these moving averages are also on a daily basis. Right, you can see here that the market last week, at the end of the week, has closed below both of those moving averages. They're starting to arc. So again, this is something that we need to keep an eye on. They haven't crossed to the downside, but we do need to keep an eye on that. Let's go back to the 5-year chart, simply because it brings these candles up to weekly. And nothing wrong here with our moving averages. You've still got the 15-week moving average above the 30. That could be potentially a little bit of an arc looking at that. However, to me, we really want to be quite cautious with our market at the moment and just potentially see what this week brings. Now, for me, if just looking at that volatility as well, the ATR there, dividing it by where the market is at the moment, we've got about 2% volatility. So that is fine. Anything under 5% is fine for the market, but we just want to make sure that the market is actually starting to trend up again rather than just hitting that line that I've got up there where the dotted line is, which is potentially a line of support. Like I said, it could be breaking through because there's about 3 different negative indicators on there that I would be very quite cautionary about. Now, for me, with my own portfolio, there were a couple of shares that I was able to increase the stop losses. Nothing too exciting at the moment, but I certainly haven't been looking for any new buying opportunities, and I haven't been for quite some time, to be fair, purely because of the way our market is looking. The companies that I'm holding, I'm happy to hold because they haven't reached their stop losses, and if the share keeps increasing, naturally I increase that stop loss as well. However, on what I'm showing you here, there are no more buying opportunities for my rules. There might be for yours. Everyone is completely different. So that's what I'm doing at the moment. I'll just stop sharing. Now, come back on Thursday. We're actually going to take a look at Stride Property Group. Again, in that property sector, I've looked at them before, and we'll just take a look and see how that's been performing. So in the meantime, if you've got any questions or if there's anything you'd like to know or learn about share trading or even financial literacy, by all means, reach out. I'm here to help and happy to do a video for you. Until Thursday, take care.